Thank you so much, Ifeoma, for joining us. Let's do an overview of what played out from the start of the week till midweek and now closing the week on a quiet note, looking at the performance at the bonds and Treasury bills market.
Thank you very much for having me. So our major market activity this week was the bond auction, which took place on Monday. Market players were fully expectant for that auction, and then we saw a subscription of over 200 billion. While 229 was offered, we had a subscription of 246 billion, and 32.3 billion was sold for non-competitive bids, while 229.2 was sold for the competitive bids. And it wasn't surprised that there was an increase in interest rates. We saw for the 2025 bond, interest rates increased to 13.5 from 12.5. For the 2032 bond, it increased to 13.849 from 13.5. And for the longest tenor bond, we saw that the 2042 bond, which was offered at the other August auction last month, was replaced by the 2037 bond, and that increased to 14.5 from 14%. And for the rest of this week, because of the auction debates which took place on Wednesday, the closing of the week was in repo, while at the beginning of this week, system liquidity wasn't that much. So for the money market trades, we've seen rates trade at ceiling rates of 14.5%. On Monday and Tuesday is the penultimate MPC meeting, and it is likely that our CBN increased policy rates from its present rates of 14%. We've seen other central banks in the world raise their rates, the latest being the Fed and the Bank of England's rates, which stands at 3.25 and 2.25. So it's likely that our CBN also increased rates to fight inflation. The latest inflation figures printed at 20.52%, which has been the highest in 17 years since 2005. So it's likely that we see an increase in policy rates come Tuesday.
Ifeoma, let's wrap up the conversation now. Beyond the expectations of maturities come next week, talking about Treasury bills, and then looking at the FX illiquidity we've also witnessed within the market as well. Talk us through how much of a pressure we are having in terms of demand outweighing supply.
Well, it's been the same case. Demand has definitely been outweighing supply, but we've also seen consistent interventions in that space by the central bank. So they've given the assurance, and we've definitely seen consistent interventions in that space.